Hey everybody, Boris Lassenrique Forrest. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar March 5 to March 9, 2018. And the story in the COM dollar land is relative weakness. They have been battered much more against the dollar than the majors and continue to get squeezed both on the risk side as risk aversion trades really come into play and on the yield side because despite the fact that the dollar got sold off against the majors on risk aversion issues and tariff issues and all those other things, the yields on the dollar continue to rise, and that makes them much less competitive, makes the Aussie dollar and the Kiwi dollar high yield much less competitive. Dollar CAD has its own slew of idiosyncratic problems, including, by the way, the issue of tariffs now really puts the whole NAFTA question into play and makes CAD even more vulnerable. That was the weakest trade of all this week. So I think the net takeaway right now is that as long as we have this volatility climate, the COM dollar trade still becomes a relative weakness trade pretty much as we go forward, especially if we start to see U.S. yields begin to climb up towards that very, very important 3% level on a 10-year. It makes the Aussie and the Kiwi much less competitive on the side. So a lot of slip down, not as much on the Aussie and the Kiwi side. Aussie kind of came down to the 77 support, 78.50 now is the resistance. Dollar CAD was the real breakout move here. Took out a lot of overhead resistance in this 28, 29 level, and now essentially has very little to stop it to go all the way to that one very big 130 level. And really, when you look at the charts, I'll show you, it can expand all the way out to 133 before it has any meaningful resist. We have also, on top of it, lots of central bank activity this week in COM dollar land, so very much worth watching. And Kiwi, very much the quieter trade. 72 seems to be the pretty serious support here. 74 is the resist. And it's just kind of continuing to trade in this low volatility regime. On the calendar this week, when we get into the COM dollar land, we have the usual PMI services on the Australian side, retail sales, but the really big event on the COM dollar side will be the RBA cash decision, which is not expected to change anything. But if anything, I think they're not going to, given the fact that you have a relatively muted inflationary climate, and a relatively muted consumer demand, they're not going to change their monetary stance in any way, shape, or form towards a more hawkish stance. So I think Aussie, from that perspective, could look a little bit weaker. We have a bunch of Canadian data that precedes. Then we also have Aussie GDP, which will be very important to see and see how well we'll do. We don't have a view on the Aussie GDP, which comes out on Tuesday. In addition to which, we're going to start to see a slew of Canadian data from IB purchasing PMI data. To the GDP that we saw this Friday, to the really big event for Canada would be the Bank of Canada rate decision at 10 o'clock. And this will be an interesting one because they could be, as Kathy says, could be less optimistic as far as the growth in the Canadian economy goes. Canadian economy has gotten greatly battered over the last couple of months on demand side, on oil compression side, on really the much more important thing, the kind of uncertainty about NAFTA. Remember, U.S. is the biggest trading partner of Canada, and the fact that it put a huge amount of doubt as to what kind of trade relations we're going to have north of the border really starting to impact the CAD, and it's very much the weak trade of the week last week and continues to be probably into this week as well. Going further into the week, the final event for the COM dollars will be the Canadian labor data. And we'll have a better idea once the IB PMI comes out. The market, there was a big decline headline-wise, but the full-time job-wise were actually not bad last time. We'll see how it turns out this time. But generally, there's usually a payback period. And given the fact that all Canadian data has been markedly weaker into this period, there's a good chance here we could have essentially more of a contraction on the employment side. So definitely worth watching that piece because that could be sort of a double whammy for the Canadian dollar. So that's the event risk. Now you're looking at the charts here, and Aussie continues to just troll the bottom here. Very, very weak trade today. 77 seems to be support. A break of that 77 support has nothing to stop us all the way down to 75. So very much sell the rally trade until it takes out 78.50. Only if it takes out 78.50 do you have a legitimate double bottom, and then you could have a W formation for a move back up to the 80s. Until that point, you sort of sell against this moving average against this resist at 78.50 because Aussie just seems to have very little juice inside of it, and there's very little catalyst here to push us higher. Kiwi, same kind of a thing. I'm going to take Caddy last. Kiwi also sort of failing. Kiwi has a little bit better support. It's still holding above that key 72 support, or 70, call it 71, 75 support. And as long as that holds, Kiwi looks a little bit better bid than Aussie. Aussie, as you can see here, broke the support this week, just traded back a little bit today. But overall, that's a negative signal. The fact that we broke support basically tells that whatever rally we have is a rally to sell, not a rally to buy. But perhaps the strongest signal we have is this. Look at this move. This is just simply walking the upper band here on dollar CAD. And most importantly, let me just bring you the trend line here. You can see we took out the line. That's it. We took out the highs. The highs were around right over here. We're around, well, almost took out the highs, 29.20, right? Today we did, I think, 29.15. We're right at the highs. We're right at this point. But a move above here, and I need to go on the weekly charts to just show you how powerful that move is. Look at this. We take out that move. There's literally nothing here until 35, 33, 34, really, okay? Around 30, 32, 33. So you have like 300 points worth of movement here if dollar CAD is able to penetrate 20, let's say 29.50, 29.75. It's a very big move. Look at this weekly candle. It's a very powerful candle. It's bullish every which way you can name it in terms of breakout mode. The only thing I would just hesitate is you can see that when Caddy makes a big breakout move, it tends to just go into sometimes a very long consolidative phase as it did over here. This, I think, is going to be different. You also, by the way, if you're looking at on the weeklies, you can see that not only is this a big breakout on the second leg, but it's off a higher low. All of these things technically kind of tell you that it's primed to go higher. If you want to be more circumspect in your trading,